Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Checking in on Facebook on the daily and weekly time frame, that middle Bollinger Band, not trusting the bulls until that level becomes support, and for good reason. We've rejected from it the past 2 times in the past 4 days that we've tested it. So that resistance is 121.30, big upper wick of profit taking at this point, and we are still in a tightening range with the 200-day support 119.16 and the middle Bollinger Band resistance of 121.30. Those levels are going to get tighter and tighter, and we will see a clear break by the end of this week. Close above the middle Bollinger Band, and we're looking back up towards 123. Close below the 200-day moving average, we're looking back down towards 115 and that low 113.55. So very important levels to be watching. And again, the upper wick shows that clear rejection from resistance. Bulls are still weak until we get over that level. Lower high, lower low pattern still intact. And on the weekly time frame, we can see rejecting from exponential moving average resistance. 50-week support is a must-hold level at 116.44, and the bulls have to get over these exponential resistances to see upside. That upper wick from last week not giving much confidence to start this week, and the upper wick today not giving much confidence into tomorrow. So the bulls started really strong initially on the 5-minute chart. Big bull move right off the 20-period support. Consolidation, bounced off of it again. Higher highs. If you had a really tight stop loss, you were exiting at the low once this consolidation broke. So every time we see consolidation, that's a support level. 120.04, 120.85, 121.34. If you walked your stop loss up and every time we consolidated, moved it up to just below that level, you would have been stopped out very close to the high of the day here. So that's one strategy to make sure you lock in those gains. Another one, if you wanted to be a little bit more lax and we're looking for a potential swing position, could have been this 20-period moving average because we held it multiple times in the first half hour of trading. And we did end up losing that at about 11, just after 11 a.m. Eastern, and bears had control pretty much the rest of the day since then. So sideways trading at the end of the day, but still showing that weakness. Very little upside for the bulls after we pulled back pretty much all of the afternoon. And on the hourly time frame, a key support to be watching tomorrow is this 100-hour moving average because we bounced off of it right before the open and held that level. That's at 119.98 and continuing to ascend. So we did break this lower high pattern on the hourly time frame with that big bull move today. So we'll see if we get any kind of follow through, but if we do break the low of today, tomorrow, that will indicate that that break of this trend to the upside has been negated by the bears. So the bulls still have proving to do, and it's all about the daily middle Bollinger Band. Been saying that for a few days now. And that level tomorrow is going to be right around that 121 psychological resistance level. And we'll see if the bulls test that again. But again, if SPY continues to consolidate, we can expect Facebook to head back down towards that 200-day moving average in the low 119s. We'll check back in tomorrow and see how it all plays out. Make sure to keep an eye on the overall market, obviously, if you are trading a big name like Facebook that is correlating pretty strong. Have a great night. See you soon.